Hello, I'm Sima from APC Finance Consultants, bringing you today's key economic events. The Eurozone interest rate decision will be announced. The European Central Bank's ECB Monetary Policy Committee meets to determine the short-term interest rate. Following the meeting, the bank releases a statement outlining its decision along with a brief commentary on the economic conditions that influenced it. More importantly, the statement often includes signals about future policy direction. Interest rate decisions are primarily based on inflation, as the central bank's main objective is to maintain price stability. When inflation exceeds approximately 2%, the ECB may raise interest rates to curb rising prices. A higher interest rate generally strengthens the euro, while a lower one may put pressure on the currency. The U.S. Consumer Price Index (CPI) will be released. Since the broader CPI includes highly volatile prices, this core index excludes food and energy costs, as these are essential goods that consumers continue to purchase regardless of price fluctuations. Additionally, global political and economic conditions often cause significant price swings in these categories. By removing these volatile components, the core CPI provides a more stable reading of inflation, especially during periods of economic expansion or contraction. Higher than expected readings may be seen as supportive for the US dollar, while lower ones may indicate weaker inflationary pressure. The U.S. Consumer Price Index (CPI) monthly and yearly reports will be released. The monthly CPI measures the rate of inflation in goods and services prices compared to the previous month, while the yearly CPI evaluates price inflation relative to the same month of the previous year. The monthly CPI is particularly significant as it is the Federal Reserve's preferred indicator for making interest rate decisions. Based on its reading, the Fed evaluates its monetary policy to determine whether adjustments are needed to combat inflation. A higher than expected reading indicates that inflation remains above desirable levels, supporting a continuation of tight monetary policy. In this case, the US dollar may strengthen, while lower readings suggest the opposite. The U.S. Unemployment Claims Report will also be released. This report measures the number of individuals filing for unemployment benefits under the U.S. Social Security program. These benefits are provided to those who lost their jobs in the past week, offering them a minimum level of financial support for themselves and their families until they return to work. Higher than expected figures signal weakness in the U.S. labor market and may negatively impact the U.S. dollar, while lower ones suggest the opposite. Thank you so much for watching, and see you next time.